The World Gold Council is out with its annual central bank survey, and the tone is clear. Gold remains a favorite. I'm Johanna Bota, and with us today is StoneX's Head of Market Analysis, EMEA in Asia, Rhona O'Connell. Welcome, Rhona. Good to have you with us. So let's start with the big headline. The World Gold Council has just released its annual survey of central bank attitude towards gold.
Yep.
What is your initial take on it?
They had 74 responses, which is good going.
Mm-hmm.
What was encouraging for any gold bulls out there is that over 90% of the central banks that they surveyed expected overall gold reserves to increase.
Mm-hmm.
And if you split, as the council does, you split them between the emerging markets and developing economies and the advanced economies.
Right.
And within that demarcation, 48% of the emerging market responders expected to increase their own reserves over the next 5 years, or to keep going at any rate.
Yeah.
And only 18% of the advanced nations. But 18 is still pretty chunky.
Yeah. So why do they hold it?
There's a little graphic in the report which shows you basically as a bar chart.
Yeah.
The most popular reason is store of value,
Mm-hmm.
performance in time of crisis.
Yeah.
What else was there? Diversification. Those were the top three. And then the fourth one is quite telling in that it refers to historical holdings,
Okay.
basically.
So then what proportion of FX reserves are in gold?
Well, this talks to what I've just said about
Yeah.
historical reasons.
Yeah.
I had a very happy time yesterday afternoon delving into the IMF numbers.
Mm-hmm.
Before you say it, yes, I really should get out more. The IMF breaks it down by country.
Yeah.
And within their international liquidity tables, they have foreign exchange, well, they have all sorts of things, but have foreign exchange in total without gold, and gold in tonnage, gold in SDRs, etc., etc., etc. So if you take the overall total,
Mm-hmm.
just like that, and these numbers are based on December 24 because they're not complete for very much later than that. So I used the December 24 price.
Yeah.
The bald total bottom line is 18% of gold as a percentage of gold plus Forex.
Okay.
But that is massively skewed because something like 10 countries have at one stage or another been on a gold standard, which meant that they had to have enough gold in their coffers to finance their international trade.
Mm-hmm.
So if I can remember all of them, which I almost certainly can't, the States, which by definition can't hold dollars in its foreign exchange anyway,
Right.
UK, France, Germany, Portugal, Netherlands, Switzerland, Austria, Belgium, and I think I've missed one. But basically it's Western Europe plus the States.
Yeah.
So if you strip them out from the overall tonnage and Forex, etc., that, because they've got such high holdings, and most of them are north of 60%, if you take all that out and just look at the other countries, then the weighting is about 8%, which makes much more sense because that's the kind of level that institutional portfolio managers would look for.
Mm-hmm. And do they talk about anything else other than gold in this survey report?
They did. There were two elements. One was reserve management as a whole.
Okay.
And the question around that was, what do you look at? What are your driving influences? Obviously, economics and geopolitics came into it, but within specific areas, interest rates were key. Performance in a crisis, gold as a store of value. So yeah, it's economics and geopolitics predominantly, and then gold slides into that as part of the matrix. They also looked at currencies. It won't surprise you to know that most countries thought that the dollar would lose some of its.
I did see that.
Yeah, the dollar would lose some of its traction over a period of 5 years or so.
Yeah.
Only about 12% thought that it would improve. More than 80% thought that it would come down. And interestingly, and I suppose it's not that surprising, 62% of them expected the Renminbi to become more influential over the next 5 years.
Any incline why?
Purchasing power parity, strength of economy, diversification.
Mm-hmm. All right. Well, then all good news for gold, I guess.
One would imagine so.
Thank you, Rhona, and thank you for watching. For more financial content like this, please like and subscribe to our channel.